I think
this is the key thing, I think, from our community, from the Germans, that, and that we have this unique kind of layer 2, layer 1 aspect. But yeah.
Oh, and we are live, it seems. Hi, everyone. Good evening. I hope you can hear me loud and clear. Maybe give a little bit of a living sign in the chat if you can. And I'm not sure if you can see JD here with me. There are the first greetings in the chat. We have, oh, now we can see you, JD.
Okay, great.
And I'd say we're still gonna wait like 1 or 2 more minutes before we start into it. So JD and I have been already talking about German tax law for a bit prior, and I had to stop here, and I'm gonna go deep into a few of the cases that are quite interesting for IOTA and Shimmer users, especially on the Shimmer EVM network. And I can already tease a little bit that there is still interpretational freedom for many things because they're not 100% clarified by law. But yeah, we'll dig into them, and then I'm also going to show you in like a practical way on how you can basically interpret it to your benefit.
Great.
And we have the Q&A open as well. So Florian, who is our head of community, is also in the chat, and he is happy to answer all the questions. So just feel free to shoot your questions in the chat. I'm going to have them here also on my second screen. So I'm going to try to somehow move them into the flow of the conversation. But everything that might not be answered at the end of this, I call it a webinar, maybe, we're definitely going to answer in writing afterwards and send it out to everybody. All right. Sad thing that I noted just like last minute is that we're actually overlapping with some kind of an IOTA community event on Monday in the evening.
Yes, it's the Monday digital Stammtisch, and every Monday, I totally forgot about it time-wise. I should have said something, but good thing this will be recorded so they can watch this afterwards. But yeah, every Monday, I think there's like 300, 400 people in there. It's really awesome what they do. Yeah.
So those are the ones we're missing now. But shout out to the ones that are tuning in live. So
yes, they're having their beer, they're chatting, they're talking about all IOTA crypto discussion going on.
That sounds nice. All right. I'd say let's get into it. Maybe I'll just start off with a short introduction. So my name is Florian. I'm one of the founders and CEO of Blockpit, in crypto myself since 2015, where I bought my first Bitcoin, and then just got on a spree in 2017, just trying out everything, obviously IOTA as well. Went crazy, and now I'm back to more conservative investment style, mostly due to the complexity of my taxes, because some of you might know it. If you start registering on different exchange, just then going into DeFi, getting the hardware wallets, getting different wallets to try stuff out, suddenly you're there with like 20, 30 different accounts, and things are getting complicated. That's also the reason why we co-founded Blockpit almost 6.5 years ago, to basically tend to that problem. And I'm going to present you on how far we've come since then. But I'm heading over to you, JD. Maybe introduce yourselves.
Cool. Thank you, Florian. Thank you for having me. And really appreciate you guys integrating Shimmer and IOTA, layer 1, layer 2, on Blockpit. And really looking forward to seeing the community use it. Yeah, my name's JD Sutton. I go by Deep Sea. And my background is a deep sea diver in the oil and gas industry, as well as a kind of I was a mechanical integrity director and focused on remote data, and then information data management systems, inspection data management systems. But yeah, I've been in crypto since I think it was 2015. My mother actually sent me my first Bitcoin, and
Wow.
that was really interesting. And she was kind of, a gold bug, and the dollar's crashing, kind of this type. And she got into Bitcoin, and then I think it was 2016. I thought, oh, I'll just put in $20 of Ethereum a week, and or maybe it was like $10, just playing around. I think Ethereum was $8 at the time or something, $12. And then of course it went up to 20, 30, 40, 50. And I was just like, holy cow. So same thing as you, 2017, I was grabbing everything possible, and next thing I know, same thing. It took me, weeks to do my taxes, to go through each individual exchange, each individual purchase, try to do this on an Excel spreadsheet and then mess it up. And fast forward, and every year I do that. I spend about 2 weeks going through and doing all my taxes. And there's definitely some good tax programs, but we didn't have one for IOTA or Shimmer specific. So, and I never really tried a custom sort of upload. I guess that is out there now that I see, but it's great. It's great to have it. I've recently used Blockpit and sent that to my tax accountant. So it certainly helped organize things.
Great to hear it. That's an exciting story. I think it's like mostly like the other way around. You're introducing your mother to Bitcoin.
Yeah. Yeah, the kids call her
Very
Bitcoin
nice.
Granny. So,
Awesome. Well, thanks, Mom. All right.
Yeah, absolutely.
All right. I'd say let's get into it. I'm gonna give you like a short introduction of what like Blockbit is, and an overview what we do. So our model is like crypto tax made easy. We basically have two parts to the system. It's one, integrating all the different data sources, standardizing them, enriching them with price data, classification data. And then the other way is like putting all that data into transaction, a machine, a tax engine, we call it, right? So whereas law made into code, and the code is basically automatically calculating your tax liabilities, or let's say like the tax liable profits and losses, because then in the end we're not a tax accountant, we just prepare everything for you. You have to do the declaration yourself. And what comes with it, obviously, since we have all the data, we have all these real-time integrations to your wallets and exchanges. You can also use Blockbit as a portfolio tracker. You get your NFT gallery in there, you get your development graph in there. So I just use it as my like portfolio tracker on my mobile app as well. And what kind of differentiates us, I would say, compared to a lot of others out there, is we really have like this compliance first approach, which made us a little bit slower than some competitors, but I think it's starting to benefit us in the long term. So we are really hosting everything like closed server system in Central Europe, no third-party solutions, no cloud solutions. We got a GDPR audit. We don't use any personalized data. It's all obviously encrypted, state of the art. We have the ISO certifications and stuff like this, which enabled us to actually get into cooperations and contracts with government authorities in Germany and Austria. So obviously, the authorities now have also cases on their table. Bitcoin DE, one of the biggest exchanges in Germany, actually had to hand over user transaction data from 2017 to 2021 for tens of thousands of users. And now they're digging into that, right? And obviously, they are also using software, and they're getting the declarations of like us, coin tracking, and so on. And now they need to kind of do a plausibility check. And so they actually decided on our software because it's the only one that's transparent on how we're working, what price data we are taking. We are laying everything open. So it's not a black box, right? It's absolutely transparent on how the system works. And that was the quite important thing for them. And maybe that's the good road to talk about some of the special cases. On German tax law, you said like most IOTA Shimmer users, they're from Germany. And I think Germany has quite an interesting approach to crypto taxation. And you have a lot of special cases, right, that the community might be interested in. So I'm here to answer any question. I'm not a tax advisor, but I probably know like the law inside out.
Yeah, no, I appreciate it, and that's kind of how this came up with. We launched DeFi. Well, we launched the Shimmer EVM in October, and then we got the Layer Zero bridge in shimmerbridge.org in December, and our DeFi network has really taken off, and we've got some pretty good DeFi platforms, and but we weren't seeing as much as we thought we would see. I think we currently have 15% Shimmer from the Layer One to the Layer 2. And it's the same network. It's just simply a EVM chain that anchors into the Layer 1. It's bridgeless in that aspect. And so we started looking into that. And I started reaching out to some of the DeFi project owners and just going, I'm curious what you think of why are we not seeing more activity here? In a long time, over 5 years, IOTA has just been building and building. And now it's finally here. It's not when, it's now. And we thought maybe we get a little more. Turns out I started learning about German tax law a little bit. And what people were telling me was that if Germans hold for 1 year, then they have zero tax. They don't have to pay anything on any, they don't I guess you could say you have realized gains, but you don't have to pay tax on it for long-term holdings. In America, we have long-term holdings, but I can't remember, it's 15% or 18%. And a short-term holdings is going to be your normal tax. If you're 30% or 40%, that's what you get for. And I thought, man, I wish I was German because holding it tax-free is really amazing. And then I thought Germans are the ultimate diamond hands. Even the government supports you guys to not sell, to not move your tokens, just hodl, So in that aspect, it's good. And maybe now I know why our communities are such good hodlers. But in the activity aspect of, if we want an ecosystem to grow, it's a digital economy, we have to see movement, velocity of movement of capital, right? It's got to be going into a DeFi exchange, and then that person's making money on, the DeFi exchange is making money on the trades, et cetera. And then they're paying their employees who's buying more tokens, et cetera. And it's going around and around, going to a game. But I think for our German community, they basically stated, we don't want to risk losing this long-term gain. So we're just rather than not sure which are we going to have a realized gain or not, because we don't have a tax solution, then, we don't want to participate in DeFi right now. And I can totally understand that 100%. And then I think you guys came out with the Layer 2 integration, which I thought was outstanding. Just did that, taking being the first one to do that. And then from the treasury side to support that, because I know some members had reached out and said, well, what about the Layer 1? So we reached out to you guys and you were happy to integrate Layer 1, which we really appreciate. So we're hoping that, our German community, as well as me. The one thing about Blockpit I really like is you guys have multiple countries in there. So correct me if I'm wrong, someone can put German and they're going to, the Blockpit is going to sort of organize it within regards to the German standards, maybe you could say.
Yeah, you could say the jurisdiction and everything that we know for 100% sure, because there have been court decisions on certain cases. We basically lock you in, right? So we don't allow you to calculate by our highest in first out, because it's just not allowed. So a lot of other tax tools out there, they let you set the calculation method of first in first out, last in first out, average cost pricing. But it's not allowed in every country to use all of them, right? You're locked in, and so we actually set that for you.
Good.
Obviously, there are also some things that are not set in stone, and I think those are probably the interesting things in DeFi, because government regulators, they went there, especially in Germany, and they just took what's there in the existing law that we know from other speculative goods like gold, real estate and stuff, and they put it there. But obviously, there has never been such a thing like DeFi and staking and liquidity mining and stuff like this. So that's not 100% sure, and that's giving you some kind of interpretation freedom. And I think one of the bigger topics for especially German users, where every crypto transaction is actually triggering a disposal and will end your 1 year holding period and realize your gains, is a topic of bridges, staking, liquidity pools, right? Where actually I'm not disposing of my assets. I'm just putting it into a protocol and letting them work. And so there are different interpretations. For example, if you have Bitcoin and then you have wrapped Bitcoin and Ethereum, most go in the direction of saying those are two different assets, right? So if you swap your Bitcoin for a wrapped Bitcoin, that's a realization. But you could also argue it's the same economic asset. And I think that's also one of the topics of like going from Shimmer layer 1 to like Shimmer EVM. Is that a different asset? Is it actually a realization? And I would say you can 100% argue it's not. So you're going to stick to your holding period. You're going to stick to your tax-free assets if you bridge those over. But obviously, you have to enter it in the software as such. And I think for anything that's not like a wrapped asset and has its own listing on like CoinMarketCap as like the W token, we already take it as such. So if you have like Shimmer on Shimmer and you have Shimmer on Shimmer EVM, it's the same economic asset in our database. And so you're not going to trigger a realization. Same for staking. So like if you're doing native staking, you're still holding on to like the ownership of your assets. So there's definitely not a realization there if you're just doing staking. But obviously, again, you would have to display it in your transaction history as such. If you just have like an outflow of assets because they go in a staking contract, it might be seen as a realization if you do not classify it as staking. And then maybe, oh, sure, go ahead.
I was just going to make sense because I'm thinking like, if someone had like gold bars or something, and then I know that there's certain institutions that basically you can deposit your gold with them, but you're not necessarily getting back your gold bar. You're just depositing so many ounces and then you'll get it back, but it's still your gold and you've never, it's not like you've changed it to silver. That would be a non-like kind exchange.
It's a fungible asset, right? Gold is a fungible asset. So we're not going to go on an atomic level and say the same gold bar is the same gold bar. Obviously, for NFTs, it would be different.
Right.
But yeah, 100% agree. But obviously, like gold bar and the gold certificate, they are different assets because there's different economic risk behind them. And so those are the two different argumentations that you could do about like wrapped tokens or bridge tokens.
Got it.
And then we have liquidity pools, and that's an interesting one because there have been already some statements of authorities on those in Germany. So if you put in like Ethereum and a USDC, right, into a liquidity pool, and you get like your LP USDC ETH token back, that's not necessarily a realization. But now you can take that LP USD ETH token and you can actually sell that. Right? It's not like a receipt that you have that you can then redeem against your tokens again, and you get back a little bit more because you earn on the fees and stuff like that. But it's actually an asset in itself that can be traded. So I don't have to redeem it. I can sell that asset. And that makes it hard again because suddenly it's its own token. And so you could argue it's actually a trade of ETH for 50% of the LP token, and it's a trade of USDC for 50% of the other LP token, which would end your holding period on your ETH and USDC, but it would start a holding period on the LP token. So if you swap it back after 1 year and you stay in the liquidity pool for 1 year, it could actually be a big benefit.
No. So that's it. So basically all our Germans, once they hit their year, they then go into a liquidity pool and they leave that liquidity for 1 year. So there'll be diamond liquidity holders at that point.
100%.
That might be good. That's going to help our ecosystem, I think.
And you're going to earn on the fees and the liquidity rewards. And if the token goes up, you're going to get more token as well. So, I mean, in a bull market, that's nice.
Yeah.
Because you're not going to have that if you keep just holding your assets, right? You're not going to have all the deals.
Can someone on Blockpit kind of see, like, let's say for that aspect, and they have that liquidity token, they put in a position and maybe they held for 6 months, but they feel like, they'd rather not hold longer, but they sort of want to compare what's my tax implication versus what they may think, hey, the bull market's going down, I don't want to experience a loss. So is there a way for them to see their tax implication for that particular asset, and then they can do their own analysis, what kind of risk they want to take?
Yeah, absolutely. So since we have all the data in real time, we call it tax optimization. You actually see your portfolio, you see the acquisition cost, you see the holding period, you see how long you're still going to have to hold that asset, and you see the unrealized gains and losses. So basically you have that. And if you want to really like trigger like a simulation. You can also just
Yeah.
manually like enter like a sale of that
Okay.
asset, calculate the reports, see the implications, and later on delete just that manual transaction. So you can simulate stuff before you actually do it.
That's pretty cool. Yeah, I think that'll be really good. I would like that, honestly, because sometimes, you might take a 20% tax hit, but if for whatever reason you think, hey, this is getting close to the peak, I don't want to see a 90% loss just because I'm trying to save 20%, and this was honestly my issue in 2017. I had a pretty decent bag, and I told my wife, and I said, should we sell? And she's like, well, and I looked at it, and I would have had to pay like 40-45% on taxes.
Yes.
So I didn't, but then
I've
I
had
lost
done 90%.
90%, so could have sold, and I think, but out of that, I think with that tax optimization, I could have seen, oh, some of this is as a long-term capital gain. So that would be 20%. Okay, I should take those. And then maybe these can offset some of my other income. And then, and in America, a really gray area thing is the wash trading, which they haven't yet determined or stated. So it's very similar. Like,
Same for Germany.
yeah, it's very gray area, and like you can do it because it's not, it's coming for sure. But until then, I'm not saying I've done it yet, but I've definitely heard some people where December 31st they do some sales, and at the end of the tax year they take so much of a loss, which then offsets their 40% gain, and then maybe they're only paying 22% taxes. So again, they're able to get out and preserve that capital at a time in the market that they want to, that they don't want to risk that 90% loss. So I think fingers crossed, hopefully we come up to a bull. I really look forward to having this this tax engine, as we call it, to really look at that of, okay, what can I sell, and what is the best optimized way to do that. So that's pretty cool.
So I do it like two weeks into December. I just take a look, and I'm just like, what can I sell? And then obviously, like in Germany, you have first in, first out, right? So it's like the oldest asset's gonna get sold first, but obviously you have different depots, right? So you have an exchange there, you have a wallet there. So even if you don't want to sell the oldest asset, you can just move part of the assets to another one and then sell. So it's gonna take actually the newer one. So you can do a little bit of like signing there. Yeah, you can mingle in there. So, but obviously you need to know, right? You need to know where are my assets lying, where are the ones that are tax-free, where are the ones that are in a loss, where are the ones that are in a profit, and then you can choose what to sell if you want to liquidate. And then again, there's different, and I'm not going to go too deep into it because I'm not a tax advisor, but if you really don't want to sell, you could also take those assets and put them up for collateral, take out a loan in a stable coin and cash that out. So basically, you still didn't realize unless your collateral gets liquidated. So there are some ways to deter the tax liability.
Oh, this is huge. I mean, this is like, I think IOTA and Shimmer, I didn't really play in DeFi. I was just always so focused in the IOTA Shimmer networks. But, now we have deeper governance where it's our lending protocol. And that's huge because you're right. Like if, let's just say I had $100,000 in crypto and I don't want to sell to take a tax hit, I could deposit that and then use that as collateral and borrow. And not only am I borrowing, let's say I just wanted to borrow 20,000 or 10,000, don't want to get at risk of liquidation, but I would be paying interest on that, small interest, potentially. But that interest becomes then a tax write-off, doesn't it? In most countries, at least.
It doesn't in Germany, so you cannot offset that with any profits that you made from like a value increase, like capital gains. So those are two different categories, so you cannot offset those. But if you're the company, if you're trading as a corporate, then you could, for example.
Interesting. In America, like, because I have rental properties, real estate. So, on those, you get mortgages. And America, it's amazing. We got, I've got one property with a 2% 30-year fixed mortgage interest, and then another one at 2.5% interest for 30-year fix. And we get to write that off. So every year, it's not just writing off the expenses from the profit that we're making from the rental or the depreciation, which is pretty huge, but then we get to also write off the interest. So it's a pretty good one. It's interesting that it's just kind of kept for corporations, but I know I'm not big into I don't understand the corporation aspect too much, but I know there's a lot of write-off abilities there for sure. So
At least
But
you've
it's
got that going for you, because everything else, like in the American crypto taxation, kind of sucks. I mean, they're not gonna
yeah.
tax on airdrops, which is insane.
Oh, everything, everything. You send 1 penny, and then okay, we want our 30%, or whatever. But
Shall we hop into some practical application?
yeah, I would love to
Show the
see it.
tool. Maybe before I go in there, short like 3-step explanation how like this works, right? So because a lot of people, they're just getting too motivated. They go in there,
Mhm.
they connect their first wallet, and then they go into transaction editing and let's do that and classification. So really, like if you want to get the most out of it and save your time, import everything you have first step, like connect all the exchanges, upload your CSVs if there's no connection, connect your wallets, import all that data, because that the software is going to do a lot of things automatically for you, like linking the transfers, right?
Mm.
A withdrawal and a deposit. We're going to see that and we're going to link it. So you're not going to make the mistake of classifying a withdrawal as a payment if it's actually like linked and stuff like this.
Mm.
Then step 2 is really going into the transactions and working through different tips or remarks that we give you on certain things. And then once you've done that and you're satisfied, check your biggest positions and check if they make sense, because you kind of know how much profit you made in the year, right? But if you have like a typo or a wrong classification, it could actually like completely give you bullshit. And so
Mhm.
check
Mhm.
those biggest positions, and then you're set to actually do your declaration. So we're gonna dive into it, but before that, I'm gonna tease a little bit here. We also got like a special discount for the webinar,
Nice.
people that are joining us, and everybody who might look at the replay within the next 48 hours. So this is
Okay.
like limited to 2 days. You can apply this to as many licenses as you want, right? If you need to do like 2021, 2022, 2023, feel free to use that code. I'm gonna put it back on in the end of like our webinar.
Okay.
But for those that
I'll
are quick,
pass that on to the
make a
competition.
screenshot. Yeah.
Yeah.
All right, let's get into the software. So basically, this is how it looks like once you've signed up, right? You get an email, activate the email, and you log in. You get your blank Blockpit account, and I think my session. Oh no, I'm in. And it basically prompts you immediately add your integrations, right? So you go up there on the right corner, and we got like 400 something different wallets, blockchains, exchanges there, and obviously IOTA and Shimmer are amongst them. If people are using them and a lot of integrations come in, then they're gonna get up here and they're gonna get ranked on the top 15.
Mhm.
So let's go, people,
We'll be there
integrate
soon.
them.
Yeah.
But obviously, if you don't find it here, you can search here or just scroll down. So let's say IOTA, and here we are. So it's gonna prompt you to import the public key, never private key. Obviously, we don't even accept that, so there's gonna be a filter. I looked up just a demo wallet from the Explorer, some that has a few transactions on there to show it. You can name it if you have multiple wallets, so you can identify them a little bit easier. And then there's a option to actually limit the import to a certain cutoff date. So shouldn't be the norm, but let's say you did the same as I. I had such a complexity since 2015, and then 2022 I lost so much that I had only losses, and I was sure that even if I sell everything, it's gonna be a loss. So I sold
Mm.
everything, and then I went in new with euros. Austria also like canceled the 1 year holding period, so I didn't care. And then obviously, if you want to use your wallets that are empty, but you still want to keep using them, then it makes sense to have a starting date put here that's like 1st of January 2023.
Okay.
But let's take the full history. So integration is connected. It's going to load a little bit. It's syncing. We already see the balance. So there's like 8 euros on there. We see it's 31 IOTA. Transactions take a little bit longer, but here they are. So we can see like when it was synced last, how many transactions are there, when was the last transaction. And now we can actually just here resync every time we want. So we are doing an auto sync for professional licenses up every 24 hours, so you don't have to care about the syncing. If you don't have that license, or if you want to have it right now, because you're now working on it. Just put the button here, sync it now, and it's gonna resync.
Nice.
It's also building the portfolio graph, right? So it's basically calculating based on all your transactions, inflows, outflows, on how your portfolio developed there. You're gonna probably know that from your favorite portfolio tracker. We only have one integration right now, but we do have the holdings tab here, which shows all your holdings over all the integrations. And maybe to make that a little bit more feasible, I'm just also going to integrate a Shimmer wallet. Let's go with Shimmer EVM. It's a little bit more interesting to look at if we have some DeFi transactions in there. So also syncing that one. Let's see, I think it's a little bit more transactions. So it depends a little bit on how many transactions is on taking a few seconds up to minutes, potentially hours, if you have like, I don't know, 500,000 transactions on it. I hope you don't. I think 500,000 is like the limit where our text engine runs into timeout. Write it as a port ticket, then we're gonna do it manually for you. Or I see there's a different tokens lying on there. Transactions have not synced yet. I might need to refresh to have that here. And if I go on the holdings, I see all the holdings, right? So I have my IOTA there, I have my Shimmer there. And if I would have IOTA on Shimmer or Shimmer on EVM or rep tokens, I would also see them here. And if I click into there, I see where are they distributed. Like if I have Bitcoin on one wallet and on the other wallet, I see it here and how the distribution looks like. Let's see how the transactions loaded. Not yet, but anyways, let's jump into, because I think I have NFTs there as well. But let's see if we can look at that. You also got a few numbers here, like your total unrealized return, some overview, and your latest transaction, so you can check if everything is synced, right? If you know what you did last, it's just like a short overview there. If we go into transactions, we now still only see the other transactions, so it might take a little bit longer for the Shimmer EVM, but we're gonna reload once we're there. Incoming, outgoing transactions, and right now they're all unlabeled because we don't know where they're coming from, right? So it might be that you bought it on exchange, send it to your IOTA wallet. We didn't integrate the exchange yet, so it's just an unlabeled deposit. But also could be you received it from a friend, right? You got your first Bitcoin gifted from your mother.
Yes.
Maybe somebody gifted their friend 50 IOTA. So then there's never going to be like a transfer. So you would have to label this. And we had to have like a quick labeling here. You just click on that and you say, okay, it was a gift. Or it was an airdrop, or whatever it could have been. Cashback, staking reward. We might classify a lot of transactions like automatically if we get that information. If we know it's a protocol that gives you a staking reward, and this one transaction is the method that the protocol uses for paying out the staking rewards, then we can auto classify it. But we have to look at every protocol step by step. So
is there a spam classification?
Not yet. This is actually one of the biggest points on like our agenda. I hope we're gonna have it live in like a few weeks.
It's funny because we just recently got this spam, and I never knew it was in my wallet until I put in my Ethereum wallet, on my Binance wallet, and my these addresses, and then all of a sudden I see all these spam transactions, tons of transactions that say, click here to redeem this, 1,000 USDT. And of course, I know that's spam and I'd probably try to access my MetaMask. But in IOTA, all of a sudden we started getting this one transaction that said, hey, you've won this, click here. So it's interesting, I think, for our community to see that, this is in all wallets, and that's kind of, it's permissionless. So that's great on that aspect, but then it allows spammers to, I talk about it. It's like the Prince of Nigeria sending out the emails. I don't know if you guys get those in Germany, but we get them in America,
Oh yeah, we do get those. I mean, mostly now it's kind of Ponzi schemes that we get where some famous person is buying it to the next bigger Bitcoin,
right?
And then there's gonna be a radio interview and stuff. I mean, I'll get first Shimmer EVM transactions in there, and I was just looking if there was some spam token, but it seems like on this wallet there's none. What you could do at the moment is you can just exclude a transaction.
Got it.
But obviously, if there's multiple spams of multiple of the same asset, then that's a hassle. So we're gonna have like a option to mark one asset as spam, and everything regarding that asset is gonna be completely filtered out.
Oh, that's great.
And there's gonna be a spam list that pre-filters most of it. So
Good.
yeah, hopefully you won't even have to classify spam yourself anymore.
Yeah.
But yeah, one of the big pains that starts with every bull market. There's no spam in a bear market. Trust me.
Right. No one's spending any gas fee for that. Yeah.
No way. So now we got the transactions in there, and what we do have here is like a huge like variety of filters, and the most important filter is probably like this tips. And if you click in there, we see like we have unlabeled incoming and outgoing transactions, right? So those are the ones that we don't know yet what exactly happened. There are some in there that are already classified. For example, here's a trade. So if you're using SimmerSwap, we recognize that as a trade, right? So it's not like an outflow and inflow of asset, but it's actually a trade, and it's gonna get imported as such. We have fee payments, but there's gonna be unlabels, and then so we're gonna show you if you want to complete like everything 100% thoroughly. Look at those tips and go through them, and you can see this progress bar here. So we have like still 77% of our transactions that we need to look at. I mean, it's 34 transactions, so it's not going to take too long.
Yeah.
But yes, so that would be like the workflow: input everything, look at the tips, work through them. We only have those two categories right now because we did not do any tax calculation yet. So we're gonna do that next. I'm gonna recalculate everything. You can press that button as many times as you want. It's actually makes sense that after every change that you do, you recalculate. I mean, if you're classifying airdrops, maybe finish them and then recalculate. But it's gonna potentially have an impact on your tax numbers if you change something. And if you want to see that, you have to recalculate here. So it's kind of done. I'm gonna refresh it. And now we also see like this new line in here, which are gonna show me cost base, gains, profits that are realized with the transaction. Let's see if we have, is it like 33 cents? So we don't have any big numbers here, but you can already see this triggered basically profit loss. Obviously, it does not for transfers, right, from one wallet to another. But it gives you a good overview, and you can later then filter here after like highest gain, highest loss, and you can immediately see which are the transactions that are really worth looking at. Obviously, in this wallet, it's not too high, but if you have like like 20,000 transactions and you have a lot of like those transactions that are like 2 cents,
yeah,
then it might not make a difference if you classify them or not. And actually, if you do not solve those tips, you're gonna still get your tax report. But it might not be 100% optimized, because if you have an inflow of an asset and you don't label it, we're gonna take acquisition cost 0, and so later on you have like 100% of the profits on whatever you get.
Right, you'll have no cost basis type deal.
You have no cost basis, so the cost basis is 0, and you're gonna pay on 100% of the disposal. But obviously that might not hurt you if it's 2 cents, right? So it depends on how much money time you want to invest, and how much you want to optimize. So let's say we have like this IOTA transaction, and it was actually payment, right? I paid for coffee, paid 7 IOTA. So I classify it as such, and then once I recalculate, I'm gonna get the correct treatment of like this is a disposal, and it triggers tax liabilities. So let's do that. And we're gonna get some new information. Namely, we have, if you go in there, the tax category, and you actually can see, let's say you bought IOTA multiple times, like 1, 1, 1, 2, 3 different prices. It might be multiple tranches that are actually getting used up here. And you can see the acquisition cost, acquisition price, and you can see if it's taxable or not. So example, if you would have held this for more than 1 year, there would be no check mark. It's actually tax-free. So those are the instruments you have directly in the platform. You can then filter by, show me only the taxable gains and the highest ones of those and stuff like this. And now I also have a few new, I did recalculate, so now I might get some other errors. For example, I get a hard fork error. So if I have a hard fork and I don't have the base asset of the hard fork, I'm going to get an error for hard fork error. But there's like 6 different things that you can get. Those are the most common ones. One that's not there yet, but it might also happen to a few users is the missing history, meaning you have a purchase of 1 IOTA and then you have a sale of 2. Well, that's mathematically not possible. Where does the 1 additional IOTA come from? And so you're basically you're selling more than you have. So again, we're gonna take like acquisition cost of 0 for this asset, and we're just gonna fully tax you, because then you're on the safe side and you're not tax frauding. But obviously, it might be you've forgotten something to enter, or the data quality of the import is not good enough. So we're gonna show you. It's up to you if you're gonna fix it or not.
Right.
If you have missing value, and this could obviously be a lot if you have like these disposals of, like, could be an NFT. We don't have price feeds for a lot of NFTs. We do have price feed actually for NFTs that are listed on like OpenSea and stuff like this, but there's a lot of NFTs that don't have prices yet.
Yeah.
So you get this missing value. You can solve this in two things. Like, either you classify as an airdrop, then acquisition cost is 0. So the error is going to be gone as well. Or you're going to update the asset values, which you can do here on the right. And you can just set what was the price for one of these assets, or what was the total price of the transaction. If it's not an NFT but a fungible asset, and you have like 95.7 something, but you only know the total price of the transaction, not the one per unit. It doesn't matter what you give in there. It's going to automatically mirror it to the same. And so if you put in something manually here, the error is going to be gone as well. And if I recalculate now, there's going to be 2 errors less. All right. I'm taking a quick look at the questions because I didn't do it so far. but before they get too much and we're not going to answer them, let me take it. So can we actually show LP providing transactions on Swapline? We can do anything. The question is, can we do it automatically, or are you going to have to do it manually? And so for LPs, again, it's also kind of like an interpretational freedom. The standard thing that we do for LPs is we're actually going to display them as 2 trades. So you have like the trade of one asset for 50% of the LP token and the trade of the other asset for 50% of the LP token. I'm not sure if I have one here. Oh, I have still, it's filtered for high scale. That's not going to make a lot of sense. Yeah, I actually have one here. So, I mean, that's the other direction. Oh no, it's actually, yeah, I'm going to basically swap Shimmer and USDT for the Tangle Shimmer USDT LP. So those are 2 trades. If you say, I don't want this, I'm gonna interpret it as I'm gonna put them in, I'm gonna get my receipt, which is the LP token, and I don't want to end my 1-year holding period, which you absolutely can, and you might get away with it. Then you would need to manually do stuff here. And if you want to do that, and that also counts for staking and stuff like this, we recommend you to make integration, which is like kind of like this in-between wallet, where you don't hold the private keys, but it's still the ownership of your assets, but they're just in a smart contract, right? But it's not a wallet, so you cannot implement a smart contract. It would include all the transactions of all people using the smart contract. So I'm gonna add like a manual integration, and I'm just gonna call that like LP, and I should probably make one for every LP token. So let's say LP SMR USDT. Was it T? Yeah, I think so. And it's just gonna be like an empty one here. But what I can do now is I'm gonna go there. I'm gonna say, okay, I don't like these 2, so I'm just gonna copy this transaction, and I'm gonna add it. Because I cannot edit transactions that come from blockchain, right? How we interpret it. There's going to be a certain security measure that you cannot just do anything and delete and edit. So you can only exclude transactions that come from API or blockchain, but you can delete manual ones. It's also something that the authorities wanted us to. So you have to actually mark and edit the transaction. You have to mark if you are doing something manually, because they don't want to look at 20,000 transactions. They just want to check the ones that you edited, right?
Okay.
So we have this manual transaction now, and I think actually that's not how you do it. Okay, other way around. I'm gonna show you other ways. So I have this like outgoing 10.1 USDT on like 19th February. So I'm just gonna create a new transaction, and I'm gonna mirror this one on February 16th, I think it was, at the time. And you should actually be able to copy and edit it. I'm gonna have a look at that, and I'm gonna do a transfer, right, of my USDT 10.1 to like this staking wallet. Same amount, obviously. Maybe there's a fee. I haven't looked. So now I have this outflow, and I'm gonna just hide this other transaction, which I think say like I'm not gonna exclude this because my interpretation is different. So I'm gonna delete the copy, and then I'm gonna do the same for this one. And now I have this outflow, and if I go into the dashboard, I have an additional integration here, which is like this LP, and I'm gonna see all the assets that went into the LP. So now obviously we know if you take assets out of an LP pool, they might not be the same amount again. Like depending on the value, you're gonna have more USDT, you're gonna have less of Shimmer token in this case. Obviously, if Shimmer goes up, hopefully, then it's gonna be that way. So you cannot just like withdraw them again and make a transfer back. You would have to add one trade to basically have the delta covered of having more than those. And at the latest stand, you're going to have a realization of some of your tokens. So obviously, that way has some benefit of having the holding period of some of your assets. And if the pool stays stable, maybe you're not going to lose it at all. But if the pool is not going to stable, you're going to have to do a trade somewhere because you're not going to get the same assets back. That's just how LP pool works. Right?
So that was to one, look at what went into the LP pool. But also if you didn't do that, and let's say you got more Shimmer back out of the LP pool when you pull it out and less USDT, you have to manually add those differences to equal out the delta.
Yeah, you're going to have to basically do a trade. I mean, in theory, you would have to do a trade every block. But obviously, you're going to have one like correction trade then once you pull it out to basically equalize on what you're actually getting back.
Got it.
And then obviously there's going to be potentially like LP fees on top. So you're going to also have to add those like as income transactions. So it's going to become a little bit more complicated if you want to do it like this. So the way of like the trade to the LP token and the trade of the LP token back for more assets has its benefits. On the one hand, if you're actually going to do it for your own year, it's completely tax-free. On the other hand, you don't have to do all those manual transactions and stuff.
Yeah, we also, I know the Treasury collaborated with Nimbus IO and funded a grant for them. So they're specifically a DeFi portfolio tracker. So, and maybe that can help in, maybe taking the last 6 months and seeing in out of LPs, and maybe it'll just present that, and then they can use those to input the manual transactions to delta
obviously. If you don't have to calculate it yourself, use that.
Because I've gone on chain to try to figure out some of that out. I mean, and it's just wild because there's like, especially when you get into Trader Joe aspect or V3, and there's 200 bins and you've got 200 NFTs with your position, and it gets intense.
Yes.
And then there's
you have to look at every block, right? It's insane.
Yeah. It's wild. So this is going to be great. This is going to be really great to help the community and help us, and we're super pumped for it. I think that's going to be really good.
Nice. All right. Let's get some more questions. So will we support NFTs on layer 1? We don't do it yet. The biggest reason being we don't have any wallets for test cases that hold NFTs. We know that you can basically, there's like an ID in the UTXO message for NFTs. Don't hate me. I'm not the tech guy, but that's somehow how it works. And we can read that out definitely. But we didn't have too many test cases yet. So if you want to have those in, please go to like feature upvote board and provide us with test wallets and upvote like the NFT coverage on the layer 1s. Then we're gonna definitely tend to it.
Okay.
On L2, they should be in. So everything that's EVM based, we're kind of like the kings of EVM. So if there's a protocol or something on EVM and we don't cover it yet, then it's not because you can't do it. It's just because you didn't look at it yet. So if you say there is this step on Shimmer EVM that people use, can you please like auto classify the transactions that are coming out there as staking rewards? Just tell us, right? It's not that you can't do it. It's just that we would have to just like activate it. So that's basically going to be like implemented in a day, but we just need to know.
So these things, is this on your guys' GitHub, or is there something different to post these observations?
So it's like the feature upvote.
Okay.
Blockpit. I don't know the exact URL. It's blockpit.featureupvote.com, which is also where people upvoted like the Tangle import and stuff like this, and it was like the highest up there. That's why it is implemented. So yeah, anything that you want to see in there, any features, any protocols covered, automated, just add some and push it in the community so people upvote it. And once it goes in there under the top 10, it's probably gonna just be a few days.
What about the layer 1 tokens? Are those automated that are going to show in people's transactions, or like does Blockpit have to actually individually approve whitelist each token?
So the tokens, I think they should be implemented automatically. I'm not sure if we do have tokens in there yet at all, or if it's just like the native token of the chain. If we have the tokens in there, then it's going to be all tokens. So we don't have to whitelist specific tokens. I would say.
Yeah. Okay. Well, we'll hear about it for sure. I haven't looked myself. I know there's a lot of different tokens on there on layer 1, and then we have tokens on layer 2. So it's definitely the uniqueness of it for the Shimmer IOTA.
So I would almost consider this a little bit of like a soft launch, just because we didn't have too much testing data. So we obviously had a few wallets that the community provided. We had a few wallets that we just took off the Explorer. But having somebody who actually works like deeply with the protocol, knows exactly what he has been doing and can provide us with a wallet, and then can provide us with feedback on what's working and what's not. That's what we are hoping to gain now in the first weeks of the integration. So please, guys, feel free or shoot just a ticket to support at Blockpit.io if you're seeing something, and we're gonna get forwarded to product. So yeah, don't be too harsh on it if something is not automated or in there yet. We probably just didn't get across that case yet.
Yeah, it's the rollout phase. Well, that's great. Oh, this is great. Yeah, we definitely appreciate it for sure.
All right. Space Cat is asking if I can be contacted. Yeah, well, you can also write me an email to Florian at Blockpit.io. Might not be as fast as our support is, though. So if you want to have a quick qualified answer, feel free to use the support at Blockpit.io. My inbox is a little bit spammed.
Nice.
All right, and then there are a few questions on like Stardust, Chrysalis, and Firefly. Maybe you can enlighten me a little bit on the technical background.
Yeah. Chrysalis was probably going to be tough. I mean, so originally there was IOTA layer 1 ternary, which then became Chrysalis binary, which then became Stardust. I'm going to just take a stance that I really don't think so, because if we all remember, was it Chrysalis? From ternary to Chrysalis, we actually had to send all our tokens from one wallet to another wallet, essentially, and that's probably not going to be accessible. I'm not sure about Chrysalis. I don't really exactly remember when the change happened, but you're pulling all this data off of a particular node, is that correct? And then this data would be whatever that node history is. And what?
So it's the foundation node. So we got access to the nodes of the IOTA Foundation. That's I'm a little bit overwhelmed by the question because I didn't write the blockchain crawler. Peter did, our head of blockchain. I'm not sure if he's in the chat and he can answer that, but I can answer that later on. I don't know the node status of the foundation nodes. But yeah, those
Yeah,
are the ones we have access to.
I'll ask Bender too. I know he has been doing a lot with this, and he even put in some support ticket, which he said he got info on his ticket that was forwarded to the developers. So that's good. Appreciate that our community is already involved and you guys are right on top of it. So that's great.
Perfect. All right, let's get to like the last part. I think we have 5 minutes left. So I'm gonna show like we have the dashboard, we have the transactions, right? You're gonna work through there, classify stuff. You can delete all this and re-import it. So don't worry. You can try around. It's all for free. You don't pay a cent until you do the text report.
Okay.
Where I'm in there yet now under report. So you basically got the text years there, depending on how many transactions you have and when was the first transaction. You can choose those here. And now I'm gonna go in here in 2023, which is already done. Calculate the report. I already did that and export it. And then you're gonna get this PDF, which is now for German users. So it's obviously gonna look different for every country that you've set. So I'm sorry, JD, if you can read it, but probably most people looking here.
Yeah.
And so it's tailor-made for the respective country, which I think is one of the USPs. And you actually got in the different text categories. And not just those, you got like this, we have like a free limit. If you're under that, you don't pay any tax at all. So we have like 90 cents here in profits, obviously because the wallets are really small that I have here. And we have this like a free limit of 600. So the result is 0 because you're below it. And we're actually going to show you where you have to input that number in which field in the tax declaration. Germans mostly do it with Elster, which is like kind of like the TurboTax of Germany. And there's different categories that things can fall into. Mostly going to be speculative gains, but if you have like income from something or if you're trading derivatives, then it might fall into a different tax category. Then you got the forms pre-filled. So if you don't want to do it online, but you actually want to print it out and send it to your financial ministry, feel free to do that. And then you're going to see different things like gains, profits within 1 year, outside of the year, and you're going to have like a single transaction list of all the transactions, which you don't need to submit. It's just here. If you get a tax audit, just probably put them like the 200 pages of single transactions and tell them to have fun. And then there's a different annexes that basically clarify on how we see things from a tax perspective. It's not 100% clear yet. So if it's not 100% clear by law, you have to do an interpretation. We have a standard interpretation that's written here. So nobody can complain on what's in there because it's all clarified. And last but not least, tax optimization. I didn't show that yet. So you're going to recalculate here as well. And then you're going to see your current portfolio, like what you're holding right now, how long are you holding it, what are the unrealized gains, losses, right? So I have my tether here. They are lying here on like this staking wallet, right? And I have this one tranche of the tether, and they have been in possession for 3 days. So they're not tax-free. That's why nothing is here over 1 year, because nothing is held for over 1 year. Total holdings, and then you have the value, which is the current value, and you have the gains and losses that are still unrealized. So that would happen if I now sell all my USD. I would realize 9.73 euros on taxable gains.
Nice.
And you can filter here again. So obviously, if you want to look for my highest losses and what to sell, I'm going to filter by losses at the end of the year. I'm going to look, do I have some losses that are held below 1 year? And I'm going to preferably sell those at the end of the year. And that's basically it. Nice. So everything else is just quality of life stuff in the settings, right? Obviously, a dark theme. And there's different thresholds that you can do, like on everything under 1 year should be.
So Bender's saying that, since Shimmer started with Stardust, everything's included, and it looks like for the IOTA, it goes back to the Stardust integration, which was in October. But yeah, I'll reach out to the community, and if maybe we could look at essentially it would be like a second layer on the layer 1 chrysalis, and if that's something that is highly requested, then I'll reach out to Blockpit and we can discuss maybe another grant to integrate this.
100%.
Because there's IOTA's had an interesting road to where it's gotten to today, but it's beautiful. Everything's running smooth now, so that's the point.
We're working for the future, right?
That's it.
And you can always manually integrate the paths, right? As long as it's automated in the future. So.
Cool. Nice. Oh, I like that. I love graphs. I'm a graph guy.
Oh yeah, we do have like these insights. I just wanted to show that where you have a different. I mean, it's not that full yet because this is like really like a very limited portfolio with like 2 wallets, but usually that thing is crazy, and you can filter here for all that stuff. And
nice.
Yeah, feel free to also input your suggestions on what you want to see here on this like portfolio insights graph. All right, and I think with that we're gonna be at the end. I'm gonna give you a discount code one last time for everybody who wasn't fast enough to catch it. Thanks for being here with us, JD. It's a pleasure. The hour flew by.
Yeah. No, this was fun, and I learned a lot. I actually have to go back now because I didn't do everything. I probably put in wallets and started, removing. So I'm going to redo it and clean it all up. But that's awesome. This webinar really helped, and really big on the discount code. I know Bender's watching this, so please give a shout out to the Stomp Dish and let them know while they're having some beer that there's a 25% discount code. It's not in German. Apologize about that, but they can always follow along with the screen and fast forward to get the discount code for sure.
Definitely.
That's the
maybe we're gonna do another webinar in German for IOTA as well in the future. So if the demand is there, just let us know, and we're gonna do one in German as well.
Absolutely, we need to have Linus on here. He's good too. He's the co-lead of the Treasury, so. Awesome. Wow. Florian, really thank you for this. And it's really awesome that you were the first one to kind of integrate. Like literally, I think we started talking about on a Monday and you guys happened to come out on a Wednesday integrating the EVM. And that was really cool. And then it just kind of went from there about, how we can integrate layer one and really appreciate you guys doing that.
Absolutely. Appreciate you as well. So,
all right.
It's been a pleasure. Have a great day. Also, thanks to the community for tuning in, and tell the others that couldn't make it to watch the review. And we are looking forward to seeing you on Blockpit.
All right. Take care, guys.